Watch List Wednesday and also big FOMC day, as well as Mag 7. We have, I think today is Meta and Microsoft. All right, good stuff. So let's get the chat up for everybody. Screen share. Where's my Zoom at? There we go. Share there. Boom. Off we go. Okay. Chat is up and running. Chat is open for everybody. Make sure when you're sending messages, you want your messages to be seen. Post that for everybody. All right, good stuff. Sam in the house, good morning. Andy, good morning. John, good morning. Willie, good morning. Dave, what is happening? Snapper here. Walt, Larry, Gina, Tom, good morning. Dan, good morning. Kim, good morning. Dr. Barnes, good morning. Richard, Vladimir, good morning. Mark, what's happening? Duncan in the house. Very good. Hey, Rob. Brock's here. What's up with that face? Hey, by the way, who gave me a thumbs down yesterday in Daily Profit Play? That's what I want to know. Did somebody try to hang on to this thing towards the end of the day? Come on now. We took profit within like the first, what, 20, 30 minutes of session yesterday. Either somebody got greedy or you hit the wrong button because we did have a winner yesterday. All right. Fed today. Key levels. Clean this up a little bit. Clean this up. Clean this up. We've got some pretty big liquidity levels today. Oops. Delete. Delete. There we go. So market ended up turning slightly sour yesterday. Futures this morning flat and big levels to watch. 63.70, 63.75, same as yesterday. So if we kind of open up right around that level, coming into FOMC, there's probably a stickiness to this. I'm going to consider. I mean, 70, it's like, can we get to 64.10, 64.20? VIX is up towards 16. We're at 1588 right now. So VIX off the lows by about 6% yesterday. It's about a 9.5% move off those lows. We'll see what another day of the VIX gives us. But most importantly, like FOMC today at 2 p.m., that's where most likely all the movement's going to be. A lot of times we traded FOMC together and prices are extremely calm going into that 2 p.m. announcement. And it takes a little bit longer to get the trade, like the trade credit that we want or the profit that we want, just because there is that it's really weird. It's like lurking risk, because everything is just going to move a lot more aggressively and quickly at 2 p.m. We've also had a couple of cases, and this is rare, but we had a couple of cases where during FOMC, the market comes swinging out of the gates and then calmly just does nothing until 2 p.m. So ideally, wondering why price up and waterfall trade index is down. Um, which let me see what the trade is. I mean, the time that's probably a lot to do with the timeline. There's time in the trade. Are we above our strikes? If I go waterfall income. What was the trade? So IWM 225 and IWM is at 223. So I mean, it's just been choppy. Just back and forth. I mean, we've got to know what that trade's doing, right? A 220 by 225 on IWM, we need price to be above 225. It's that simple. So for that trade to be profitable, we want to see the IWM running to 230, 235, previous all-time highs at 245. That's where we want to be for that profit. So it's really it should just be like break even. I mean, we paid 288 and your break even should be about If it's up to 223.56, that'll be 356. I mean, you should see some value to that trade, although there's a lot of time in it. We're going all the way out to end of the year, just to January actually. Okay. All right. So key levels. Let me bring up dynamic. This was an interesting play yesterday. Just some of the levels that I had. I posted this in Telegram how key that 63.70 was. Bounced once, twice, three times, four times, and finished and pinned 63.70.87. My double up alert yesterday actually cash settled. I didn't keep the trade this long. I took the trade earlier for profit. But it did cash settle at 63.70.87. That was a $414 winner per contract. So that, again, we called the level. We posted that yesterday. Double up was a good result. Let me go to where's my levels? So key support at 70 started to show up all day. Price ended up hitting this thing multiple times towards the end of the day, closed and then right back up to 70. So that large level, the kind of the flip between like positive, negative gamma, it just kind of stayed right there, which was good. Dre's, and it's your question. Uh, I mean, you can look at the trades and see if they're the same price. I mean, if you watch the session, I had, there's a reason I went out further in time. The trades that I took for trades number 99 to 98 for waterfall, I still like those trades. If we get a pullback though, um, that SPX trade that we took on Monday is likely going to be showing profit if we have a pullback. So if the market falls down, then that SPX trade is going to be pretty solid. In fact, I've got three SPX trades that if we see the market correct a little bit, we're going to see those nicely profitable. And then the one that's out to January, I'm really not worried about that. I'm just encouraging the market, find all-time highs again by the end of the year. Right? We had the SPY as high as 640 and change, as high as 638. Is that it? Yeah, so almost 639. So we have a 635 by 640. So if we can breach that level again towards the end of the year, possibly like a 650 SPY, then yeah, no problem. We'll make profit. Okay. So there's SPY levels today. Biggest one actually 638, 638, 40, and 42. SPX. Let's map out like our potential top and bottom. Also, just so we talked yesterday, we've been talking, every day in these daily profit plan rooms. I mentioned the VIX rule of 16. I don't know if you saw me delete those in the morning, right when we started the session, but when we have the market based on the previous day's close, I map out the potential top of the day, the potential bottom of the day. And as the market was up here and falling, okay, I remeasured and I put in a modified bottom. And as we hit the bottom, I put in a modified top. So I'm kind of constantly using it. And today is going to be one of those days where I would say, well, we got enough volatility with the FOMC. We could probably test the theory on the VIX. Okay. So if you take some notes here, I'm going to just run a calculation 1588 divided by 16. It should be right under the 1% rule. So 15.88. So right there, right? 0.99. Okay. So let's look at the close here. Go up 0.99. And we're at 63, or that's 63 points. We're going to go 64.30. Okay. 64.30 potential top today. And we'll go 0.99 from the close down. This could get a little bit wilder to the downside if we see the VIX spiking up, but starters 15.88 VIX, we're looking at like a 63.10, 63.10, 63.05 potential bottom. Watch VIX. If the VIX is spiking up, if we're at 16, 16.5, 16.7, 17 plus, that spike up on the VIX can make this bottom not safe. So I'd rather not pick a bottom today, but rather either one, see price, stay inside this choppy zone, which right here kind of sticking around this 70 and 75 area, or we see price, maybe getting up to the top. I think that the top right now is easier to call than the bottom. Okay. So today is potentially one of those days that may not be until 2 p.m. and onwards, or it might not be until Thursday. But I'm guessing that we're going to see some open flows and some open direction probably coming in the next couple of days. Just there's all the excuses, all the catalysts. FOMC, Mag 7 tonight, lots of earnings tomorrow, Mag 7 again tomorrow, and then I think we have core PCE tomorrow as well because it's end of the month. And then we have non-farm payroll on Friday. That was the tariff deadline, August 1st. I don't think that matters as much because we are in talks with Eurozone and Japan. Um, but still, potential top and bottom for the day. Okay. Microsoft, I mean, we're sitting at all-time highs, Don. I mean, I put a trade in for newsbreakers on Microsoft. So I'm looking to see if I'm getting filled at some of these like high levels. I'm just using like the past 10 to 15 earnings prints, going on the high side of earnings, like the higher side of like those earnings reports, and trying to do like a fade. I like the idea of, if the market's going to give a little bit of pop on positive earnings, like, oh my gosh, Mag 7 did it again, and it pushes up higher. I think we go into August and we start seeing that correction or pause. So it's at the point where, we're hitting like a 40 plus year stretch of like markets haven't stretched this much, haven't been this consistently bullish, hasn't melted up. I mean, even one of the weirdest months that we've ever had in the S&P history was 2017. Does everyone know what happened in 2017? Maybe, maybe not. 2017, the S&P was positive every single month. Every month. There were tiny, tiny little pullbacks, like to the tune of maybe 2 to 3%. That's about it. Every single month. It was extremely low volatility and it just melted up, melted up, melted up, melted up. And we had a huge volatility event in 2018 to surprise everybody. It was like February 2018, the volatility index ripped up to like 50, I think 40 or 50 out of like a 12. So, and then the Fed backstopped it, and then we climbed up to highs again, fell again to like lower lows, and then we climbed up again, and we crashed during COVID. It's like, what a wild couple of years. But 2017 was like every month S&P finished green. It wasn't like 20 plus percent positive, but it was like, I think it was 10 to 12% up, just, but the slowest, like fractions of 1%, but it was green. It was green. It was green every single month. It's kind of crazy. So you're holding Apple through earnings. Yep. I'm holding Apple through earnings. I'm holding positions through earnings. I have downside protection through earnings, like got collar trades on Tesla. I do want to add, so our lesson today, I'd like to talk about some rolling calls because I'm going to do a couple. I've got the August 1st expiration, which is Friday, so that's only a couple days out. But I'd like to spend today's little segment on rolling calls because I've got a few. So Intel, Tesla, IWM, UNG, JD. I'll go through each one of those and try to get those replaced. Okay. I also did a trade. So I had two new accounts open up, and this one I'm doing. This is an IRA account. This is a margin account. So I allocated, and this is it's going to be interesting because I bought shares of the SPY, and I'm not happy about where they are. It's like I want to pull back. So this is why I did the collar trade. I've been talking about this for a while. If you want to protect the downside, collar trade. So I sold a 637 call for almost $7. I'd love to say like that's my income. I'm gonna make $700 by the 15th. That's cool, but what if price drops? So I'm gonna sacrifice a bit of that call premium and buy some protection for 470. So my August 15th 633 put, which is just below current price, cost me 469. I netted 220. So if SPY by August 15th is greater than 637, gets called away for some profit. I'll make I guess an extra 220 bucks, which is fine. I'll make 220 bucks in 2 weeks. It's fine. Little income. If price goes down, I'm going to ride this put I'm trying to ride this put down to like 600 SPY, 590 SPY, 580 SPY. That's kind of the window that I'm looking for. I may not have enough time in that, but if I can get put protection to pay me, I will take the profit and I'll just readjust my collar and I'll readjust my break evens. And I'm going to try to just chip away. And this right now is worth about $200 of income in the next couple of weeks. If I have this ability to increase it to now it's $500 in a couple of weeks. Now it's $1,000 in a couple of weeks. Now it's $1,500 in a couple of weeks. I'm going to be actively doing this on, this allocation. And the goal is, okay, I've got, less than half the year left. And this account opened up around 91,000. My goal is to try to churn this thing for, 10, 15, 20 grand. It's not bad for half a year. And it doesn't have to be really difficult. I don't have to add a ton of positions, but just kind of managing with the trades that I have, protecting the downside, hopefully getting some good premium on the outside. Isn't the covered call acting as downside protection as well? No. Covered call doesn't do anything to the downside other than just help you lower the cost basis a little bit. If I sold a covered call, okay, so covered call. So I buy the SPY. It was like I'm ballparking here, 635. So I buy 100 shares at 635. Okay, so 635 is my break even, right? So I buy the shares. Then I come in and I sell a covered call at 637. Okay, so this is a sell call at 637. So I buy the shares at 635. I sell a call at 637. What this would do, this was for about $7 credit. So the downside protection is, well, this technically does lower my cost basis, but through the $7 credit, I have no protection underneath that. So if the SPY, let's use this text box here. So my break even is now 628. That makes sense? So I buy the shares, I sell the covered call. Now my break even is down to 628. That does help downside protection, but what if the SPY drops to 600? What if the SPY drops to 620, 615, 610, 605? I don't have that protection past that $7 credit. That's why I do the collar trade. That makes sense? So I add, I don't want to fool anybody with colors with like red as a stop loss because it's not. What I'm going to do instead is here is, okay, sell the call at 637, and then I buy a put. Oops. Then I buy a put at 633, and that was a 470 debit. So collar trade net credit for, I got 220. I know the math here shows 230. I'll just keep it simple. So 230. So now my break even is going to be 622.70. I'm sorry, 632. 632.70. Because all I can do is take my shares minus the 230 net credit. But now, if price is above here, I'm still getting it called away. I'm making 230 bucks. If price is coming down every bit to the downside from this level, I now have protection. So if we dropped all the way down to 600, okay, I have $33 of value in this trade, which can help me, go from a 620, 632 break even all the way down to a low 600 break even. That to me is a much better place to start as far as I want to buy more shares, right? I mean, you can always just buy more shares at cheaper prices, but it's really nice when you can just ride a put low enough to then see the market bottom out and then go back up. And I can take this thing back up for 20, 30, 40 bucks a share. And I did that just because I had some protection. Yeah. Okay. That makes sense. All right. So the cover call is only as good as the credit you receive as far as like downside protection. But once that credit is like received and anything goes beyond that to the downside, there's no protection. Okay. All right. Key levels today. We've got just a few minutes before we get into the market. Opening bell in about 7 minutes. 6430 potential top, 6310 potential bottom. I say watch VIX on the bottom because if we go up today into the 16s, and again, this is likely coming after. I mean, everything today is going to be all about, um, let's see here. Everything's going to be about FOMC and then Mag 7 after hours. We also have Bank of Japan coming in overnight, so maybe some currency volatility as well. Expecting to be a pause. This is pretty much baked in. I don't think Powell's going to surprise us today with a rate cut. Bank of Canada, 945. They're looking to keep rates the same at 275. Advanced GDP quarterly came out positive. So we had a negative revision from -0.3 to -0.5. So that's not a great sign, but we did have a 2.5 forecast came out 3%. So even despite tariffs and everything else, shows that we're growing at 3%. We're not having two negative quarters of GDP. So that's a good thing, right? Previous was -0.3 revised to -0.5, but this was 2.5 to +3. So, there's that, technical recession, which is if we have two quarterly GDPs and negative growth, then the US is in a recession. That's what they say. But the markets don't care. Honestly, it's like we can have a recession, the markets go up like 50% of the time. So I just think there's so many reasons for this market to be thought of as like everyone's bearish, everyone's bearish. I also think that's why the pain trade is the upside. Rob says you talk crash protection yet? I mean, we talked it last week. We took a trade last week. Crash protection to what degree? I mean, I've got position protection. I've got futures market that I'm using for hedges. We took a trade last week on MES, which I showed you can trade MES or XSP to get that downside protection. I'm playing a trade out to October. I did MES, which is the E-mini futures. Okay, so the micro futures, and I bought a 6,000 put, and then I sold like a 5,400 put or 5,450. Basically, it's a $250 risk for like a $2,500 profit. I don't think I'm going to get a full $2,500 in the trade because I don't think we're falling back to like 5,500. But if we turn 250 bucks into $1,000 of profit, I'm going to take it. So if I can reach about 50% of my max, it's still like going to be 5 to 1. 4 to 1, 5 to 1, still a heck of a hedge. And I think we find some support either previous resistance or this, kind of choppy breakout zone that was a little sticky around that like 60, 50 to 6,000 handle. So if we have a pullback, similar to what I talked about the last few weeks, watch the 21-day, watch the 50-day, watch the previous resistance levels. There's a 100, there's a 144, there's a 200. All of these are offering support. I think the stickier support is going to be a cluster back here to all-time highs. A lot of dynamic support as we've stretched higher and put everything back into the buy zone after this flip in, May and June. Okay, so yeah, I mean, I think a pullback has to happen. The market could do all sorts of stuff. The market could go up first before it falls. It could just be like starting to turn over now, so we just start seeing a little bit of red. What would be kind of nice as far as like watching this market kind of roll over and correct a little bit is it just does it so slowly, right? It's just like, we're making lower highs and lower lows, but it's so slow and so controlled that if you just wait for a trend line break, you're long, stop loss below, it's another dip. But we all know that that's probably not what's going to happen. This is great if it happens. It's rare. It's rare that the market's like orderly corrections, pullbacks. I mean, I don't know. It could be Epstein files come out and release that Donald Trump did ABC and market dumps. Trump says he's going to fire Powell. Market dumps. Like I don't think this pullback is going to be easy and orderly. I think it's just going to happen. So we'll find out. What if a couple Fed governors disagree to say it's appropriate to cut 25 basis points? Well, they're not going to cut. So the actual policies are not going to cut. More than likely, the Fed pressure that continues to mount is we can have dissenting Fed governors, but Powell's still going to be doing the press conference today. I don't know if there's a dot plot today, but Fed governors could want to cut or express their opinion to cut, but they're not going to cut today. I mean, that would be a huge surprise. The pressure is if they cut, they look like they're falling right in line with Donald Trump pressure. So I don't think they're going to do that. I think they're still going to be on pace to cut September, December. September, December also is it's a big refi window for U.S. debt. It's a big refi window for everyone that took out loans during COVID. I mean, a lot of them had five-year windows. that time is now. Like a lot of the borrowings that happened in 2020 are coming due to refi this year. And I'm sure that refi is exponentially higher than what they took it out for back in 2020. Okay. All right. 1 minute for opening bell. I'm going to see if I can get some bear call spreads up here into like the 64, 10, 15 area. If we have like I mean, we do have some open space, but I think we're going to be pretty sticky this morning until we have the FOMC. So the goal is I'm going to just look at a standard daily profit play, and then I'm going to focus on, make sure I can sell this top. So we've got 1 minute. So July 30th, 1 minute for the open. See where our deltas are at once this goes live. Key levels for the day. Biggest levels right around that 63.70. Okay, opening bell. We're probably opening right around the close yesterday, so we should be right in here. We gapped up just a little bit. So just a little tiny gap. First thing, I'm going to go after maybe looking to sell the highs, 64.10 or higher. Can I get a decent credit for that on a bear call spread? It's not bad. 64.10, 20, 15, 25. That's not bad, actually. See if I get 225 for this. Okay, credit's going up a little bit. Those are higher deltas than I want, so I'm going to move these down a little bit. 20 delta, a little bit better. If I can get over $1, I think I'm just going to take the trade. 120. I'm trying to get 125 on this. That was fast. Let's see. I'm going to go. Uh, what's my top? 10 is my top. 64.10. Okay, I'm going to try a 64.10 by 20 and 30 by 20 and get over $2 on this trade. I'm going to try for 215 credit, going down to 210. Fill the 210. Okay. Daily profit rate coming out. Sell call at 64.10, sell put at 63.30, and then choose your width. 64.10, call side, 63.30, put side, choose your width. Putting that in the alerts right now. I went 10 wide. 7:30 expiration, 64.10. Okay, so trades in, putting this in the tracker as well. That is 210 credit. I'm going to try to go after 50, 60 cents profit on that one. All right. Center price hanging out around 63.75. So we're gonna see if we can just see some sticky prices here. UPS is down to COVID lows. I don't know. I think we had UPS earnings this week. I'll take a look at that one. So levels I need to watch for this morning, 64.10 on my upside. 64.10 is back to the highs. And 63.30 to the lows. That's given us some decent wiggle room here to see price just kind of chop around. Okay. It's in the Telegram channel for daily profit play alerts. So if you have daily profit play alerts, you got the trade 210 credit. I'm going to edit that and just give us a profit target. Let's go after the numbers 15 to 25%. So 0.85, 180 or lower. 180 or lower for profit target. I'm going to try to hang in there a little bit longer and try to go after like 50 to 60 cents per contract. I kind of like the 25%. So $1.60 or lower. I'd be pretty happy with a $1.60. Okay, so now I can start getting a little bit more creative on the rest of the day. I want to do some rolls. So SPX trades today, 1, 2, 3, 4. That trade got filled for 210 credit. It's already up a few bucks. Let's go to close here. I'm going to go $1.60. I will not hold this trade through FOMC. It's not the plan. My plan is to be out of this trade well before 2 p.m. Eastern time. But if price just stays right in this zone, perfect. Okay. Now, if I wanted to sell the highs, I'm looking to sell kind of at the money, right around 63.80. So if I do a bear call spread, I'm going to sell 63.80 by the 64.30. I'm going to go 40, which is 60 wide. See if I get filled for $55. I don't think the top is going to be that high though. 15.85 puts me at, let me go exactly 0.99%. So we open here, 0.99%. That's right around 35. Okay. So I'm going to go to, yeah, that's probably good. Take this trade here for like 50. I'll try $55 in case we somehow poke up above that. But I would be willing to take like $50 on this trade. So if I go 63.80 by 64.40, that's 60 wide, which would show like I'm risking, $6,000, but I'm going to take a huge chunk of credit. So I'm going to try to risk only $500 to see if price will just stay below 64.35, and then any dollar below that, 64.34, 64.33. Anything below that is every point below 64.35 is $100. So it'll be a pending order. Okay, and again, I put these trades out there because they're great levels. I'm playing the VIX. I'm kind of measuring my tops for the day. This is the top trade, but it doesn't fill very often. When it does get filled, it's easy money. When it doesn't get filled, that's most of the time, then fine, it just canceled and I'll get that buying power back. But I'm only risking $500 in the trade. Okay. All right. So trades in. It's trade number 964 for daily profit play on the tracker. It's in your Telegram for daily profit play. And we're just going to sit and let that one marinate. So there's the trade up $7, no big deal. Waterfall. These are the bearish trades that I put on. That's the call condor trade that has a profit trap, potentially $500, and $1,000 profit trap in the 65s and 6600 zones through August, September. Again, I'm going after the window where I think this market pulls back. And one of the interesting ways, timing wise, for the market this year would be nobody wants to see it, but think about how hard this market's been grinding just to get to that Fed rate cut in September. That could be the perfect setup for buy the rumor, sell the news. And the market's like, okay, we priced all this in. The Fed's cutting. Are they going to be more dovish? Yes, no, maybe so. If they're not more dovish, then the market may not love it. I don't think today's opinion is going to be anything other than a pause. right? So this decreased like less than 1%. We had a pause probability at like 97.4. Now it's 96.9. It's still going to be a pause. Like Jerome Powell is not going to cut rates today. This tool has not been wrong since like 2009. Now, yes, it changes all the way up to like the day of FOMC, but it's usually not wrong. So nothing looking like it's going to change. Probabilities for a cut in September have decreased slightly. We were in like the 61 to 62%. I'm looking right here. We were around 62% last week, and now we're 57.8. It's still the highest probability that we're going to cut in September. And then we have a pause through October, and then we have another cut with the highest probability in December. So right now, those are your two cuts for 2025. I would imagine that it's going to be 25 basis points and 25 basis points. The market's probably going to have more of a surprise reaction if we cut more than that. So, how does the Fed look really silly and really stupid? Well, if they, number one, don't cut at all, the market's not going to like that. If they do cut, but they cut more than 25 basis points, the market's not going to like that. So I think, interestingly enough, lesson learned last year, don't cut 50 basis points. Market's not expecting it. Was a surprise. Bond yields reacted very poorly. So I think they're just going to continue to like hold this transparency. We'll see how much pressure Trump continues to put on Powell. I think I don't know. I mean, this whole thing with like Epstein and Trump, I mean, they're intertwined in some way, shape, or form, as were tons of other people. I mean, Bill Gates was intertwined, Bill Clinton's intertwined. Who the heck knows like what dirt, Epstein has on all these people? He had dirt on royalty for crying out loud in the royal family. So I'm sure Trump is not an innocent fella. But is it like mounting pressure? Is something going to like derail his presidency from this? Or it's like, yeah, well, are we past cancel culture? Are we past like woke culture? I don't know. I really don't know if people care. I mean, oh man, what a terrible thing that Trump maybe did, maybe didn't do. I don't think people care. I don't think the markets are going to care. I think this is all theater. It's all just misdirected headlines. You know, so it's just noise in all honesty. So who cares? Like this whole like administration so far has been a circus, and it's not going to change. Like there's so much noise. It's the best thing you can do is figure out how to get through it. All right. So keep an eye on this. 64, 10, 15. Let me check and see. I went 10 and 20. We're already trading for 190 now. That's not bad. Let's see if we can look at some other bear call spreads on the day. So if I went 15 by 25, I get 90 cents there. I mean, if we don't breach the highs, let me see if I can get something reasonable. So I could get a pretty safe, 80 cents here. This isn't a bad trade. Um, I want more profit than this, obviously. Let's see if I go 25, 30, 35, 40. Those are pretty good indicate. I don't know. I don't want to force a trade when if I have to, like kind of what I like to do is this is a solid trade for the morning. It's a Wednesday. The numbers work. Our 3 days of zero DT, Mondays and Wednesdays are our best days to trade daily profit play if you want to go directionally neutral. And I think if I get a sense of where prices are going, like if we're going to go higher today, then I'm going to try to get better credit and sell more contracts at the highs. If we're falling today, that's fine. I just want us to keep kind of the integrity of this choppy zone right now. Just stay sideways for the next maybe 20, 30 minutes, and let's try to pull out as much of this daily profit play as we can. Okay. So we've got levels here to pay attention to. I would also note a couple things. You can write these levels down. 6405. Write that level down, 6405 and 6335. 6405, 6335. These are the 100% ATR levels for the day. So if we're going to see a top today, we have to go greater than 100% ATR. If we're going to see a bottom today, and I'm talking like my top that I measured on the VIX at 6430 or the bottom at 6330, that is exceeding the 100% ATR on both sides. So a lot of times what I do see in this ATR measurement is the market, and it did it yesterday, it hit the 50% upside and then it hit the 50% downside, and then it stayed here. So it's rare to go 100% ATR for the day. It's there, it can, it might happen like once a week, but it's rare to do that. So just write these levels down. 6405 could be a nice top today, and 6330 could be a nice bottom today. Now we already have the 6330 noted, but our call side is 6430 based on that 0.99%. But if VIX drops a little bit, if the VIX goes down, then this will kind of decrease that potential top. But it's like I said, rare that we're going to see a full, exceeding move through the 100% ATR. Okay. Art says, what's the minimum credit we should take? Um, I'm 10 wide. I'm risking, oh, $1,800 to make 200. It's not a good like reward to risk trade. But generally speaking, with the credits at like, I'm out of the money at a 15 delta. Um, I can generally get about like maybe 10 to 20% of that width, 10 to 20% of the width. So that's kind of ballpark. If I'm, 10 wide, I'm trying to get a dollar to $2, like $1 to $2. So it's kind of in line with what we expect. Is I'm 10 wide on two trades and I'm getting over $2 credit. So it's, and again, the reason I'm trading that is because I think the probability is in our favor. So it's already trading at, buck 90. So we're up, $20, $30 right now per contract, and we'll see what price does. But we just want to see some more time. I think after the 10 o'clock might help us as far as like time decay. And I'm also looking to see like, can I sell some stuff up here? Hopefully price just doesn't make a rip. I want to see price just kind of hang out here between uh, this area. I mean, even if it's 63.90 to 63.70, if it just hangs out in here, that's fine. Our trade will do just fine. Okay. All right. I want to go into it is watch list Wednesday. Okay. So I want to bring up pinch point scanner, and I want to talk a little lesson today on rolling calls because I've got a couple to take care of. So let's go watch list Wednesday. Let's take some notes. So pinch point scanner. Oh my gosh, what? All right. That's crazy that we have so many stocks. Apple is now in a get set mode. I'll take a look at that one. There's a lot of stocks. Pinch point's about to get some real action here. Apple is pretty good. All right, we should definitely see. I mean, we have earnings this week on Apple, so it makes sense. Like this thing is lightly pinched, but we're likely gonna have a move because of earnings. So that's a get. That's a get set. I'm more interested in. I cannot believe there's so many stocks here. So Starbucks, I think, just had earnings. So Starbucks had earnings, negative earnings, positive revenue. We're still nicely coiled. So let me see how this one looks after some of these coils. Potentially a coil. This is October to November, December. So, 90 days is probably good. Light coil. Ooh, baby. Starbucks is looking pretty good. So we had a big earnings candle. Um, it would have been nice to see that trade pre-earnings just because now we're getting a move. But Starbucks either has what it takes to kind of open up lower. I call this neutral. We either get back to the highs and see some direction, or we continue to proceed lower. But I'm getting a pretty good setup where I think volatility and direction is likely coming sooner than later. So this one is a candidate. So Starbucks is a candidate. I'm just going to write some down, then we'll price them out for watch list Wednesday. So uh, Starbucks. Starbucks is on the go list. Um, CART. Is that Instacart? It says Maple Bear Inc., but I'm pretty sure that's Instacart. That is, how is that in the Go filter? That needs a little bit more pinch. Interesting. All right, I'm not going to that one yet. I don't think that's as pinch as I want it to be. IONS. This is Ionis Pharmaceutical. Looks like we just had earnings on this one. $44. Let's see what the move is. I'll write that one down. IONS. MGM should be the casino. MGM Resorts. Yeah, that one's pretty nicely pinched. Okay, that's gonna. It just depends on how it prices out. MGM, HST, too cheap. DRS. This one's been in an uptrend. MS. Is that Morgan Stanley? Oh yeah, sitting in some highs. Maybe MS. Depends on how it prices out. Um, this one is. One second here. Let's see here. MS 144. I see a little. I mean, I'm sure there's direction coming sooner than later, but not quite there yet. Okay, EPD. Enterprise. That's not cars. That's something else, I think. What is enterprise? Oil and gas pipelines. And I'm staying out of that space. HAYW, Hayward Holdings. Nope, that's too cheap. ACGL, maybe. Okay, I'm gonna look for some household names here. Um, that's a lot. That's like the most I've ever seen on my Go filter. I actually just messaged the dev team to just double check because that seems like an awful lot of stocks to be this pinched, and I don't think that's the case. So I'm gonna go find some household names here. Russell is pinched. This is a good thing. It's a good thing to have the index. So Russell is lightly pinched. I think we're gonna have some type of volatility expansion move. That's not a bad play. Simple pinch point could take a good trade there. Up or down doesn't really matter. Visa, I think, has earnings this week as well, or had earnings. They did have earnings. Hardly anything happened. This one's pretty coiled. I kind of like Visa. All right, Visa's they'll make the cut, make the grade. Meta. We are lightly pinched on Meta. We have earnings. I've already got newsbreakers trades running on that one. CCL is Carnival Cruise Lines. Lightly pinched. Merck. Lightly pinched. FCX is Copper. Lightly pinched. Dow. Yeah, I think we're going to be due for some moves. So I'd say Russell and Dow, if we can get the right price, give us a move towards expected. KDP, Cure Dr. Pepper, ADM. Let's see, Adobe. Adobe at 367, lightly pinched. Target, lightly pinched. Carvana, got a trade here on light. Yeah, I need a little bit more time. These aren't quite pinched in the pressure cooker long enough. I'm just curious, like IWM and DIA sticking up there. I've got a little list here. So my watch list Wednesday today, I will post in the Telegram here. So we'll go. See if I can get an image here. Watch list Wednesday. And SBUX, IONS, MGM, MS, IWM, Visa, DIA. Pinch point scanner. Finding some gems to price out for some incoming movement. Okay. So sharing this to everybody on Telegram. This is a list I'm going to price out. See if I can find some trades. Okay. So take a look at those. DI is getting hammered. Come on now. What's hammered? I mean, we're down 0.09%. So just context is everything. This is barely moving. Could it go down? Sure. When you say hammered, I want to see like a ridiculous candle. Oh my gosh, it's down 1.5% today. That's getting hammered. 0.08, not getting hammered. It's slightly red, right? I mean, SPY is hanging into just a break even, SPX break even. Futures flat, like dead flat. Our trade this morning should be looking way better. So this just sideways and going for 30 minutes or so. Daily profit play for today is up about $40. So I'm up about 20%. I'm gonna let this marinate a little bit longer. I'm gonna try to grab 40, $50 out of this thing. It's close. I mean, all of $50 is fine. I mean, I'm up over 20%. Get that 25-ish percent. Happy with that. 25 to 30% is always a pretty good profit target. So keep an eye on it. We'll let just as we're in session today, I'll just let more time go. Okay. So I'm gonna price out a couple of these, and I want to do some lessons on rolls. So let's do. We do have Starbucks at earnings. I'd like to go IWM. Okay, IWM has been really, really coiled here, and this one actually pops up, and it just depends on how it prices out with my options. But it's fairly decent. I mean, SPY is not pinched at all. Q is not pinched at all. Dow is lightly pinched, and Russell is lightly pinched. I mean, honestly, best thing is probably just to wait because as we go into August, September, this market just might go sideways. We might be like, oh, correction, correction. We might just pause, right? We might just pause. And if I take the trade now and all of a sudden our sideways move is like all of August, all of September until the Fed cuts in September, it's like that's a lot of time to be in a trade waiting for direction that we don't get it. So I'm just going to let those just kind of marinate for a second. Starbucks has already started to see some movement. Okay. So if I called this center, This could be really interesting because a further move to the downside in Starbucks or a move back up to this high in Starbucks should get us some profit. So this one, I mean, this was a nice coil on Starbucks. Um, so the ability to fall back down towards, maybe 80, maybe 75. Let's see what it has for the expected move. So Starbucks, we already had earnings. September, October. I'm liking this kind of October window for some of these trades. Ah, fudge. Well, that's already kind of a cancellation for Starbucks because we have a 7.7 to $8 move, and we only have 5 wide strikes. So I just don't have a lot of precision on that trade, unfortunately. Well, that sucks. I mean, I could buy a call, buy a put, and I'm paying more for this than I am the expected move, so that's not a good trade at all. Fudge. Well, never mind. Starbucks, it's poorly priced, so that's an easy one to cross out, I guess. IONS, not a big mover, 705 and strikes at 250. Terrible pricing. MGM, trading at 37.83. October, we got dollar strikes. We got a $5 move. Not bad. Okay. MGM, can I get a $4 move from 38 to 42? Okay, so it'd be 50 cents to make $1.50, or it would be probably cheaper. So if I go roughly 38 to 34. Okay, so this one sets me up for potential. I can pay 85, $86 to make 115. I'm going to try to go after a 50% take profit, which means I take the trade for about 85 cents and get out for about $1 25-ish. I'll go 50%. So if I pay 85 cents, I'm trying to get out at $1.25 to $1.30. I'm going to take this trade in MGM for pinch point. So 82, 83, hopefully no more than 85 cents in this trade. Got filled for 84 cents. Okay. Pinch point, new trade. All right, trade number 37. This is a October 17 expiration. We're going 84 cents debit. Okay, now I'm going to set that trade up with a take profit. Where's it at? MGM. $1.27 credit, take profit. This is going in for pinch point. Okay. Um, I have this done in 30 seconds. Okay, take profit set at 50%, and we'll see if that's one of our many winners that the broker just closes out for us. Okay, that one's checked off. Good. Let's go to MS, Morgan Stanley. Very nice, Bill. Yeah, we're looking good on daily profit play. Daily profit play looking good today. Up about 50 bucks, 20+%, not bad. So my trade is trading right around my price at $1.60 is where I want to get out. I'm gonna see if the broker will just tag me here in a couple minutes. So it's trading at 163 mid. I've got a debit at 160, 159. We're right there. I needed to kind of oscillate back and forth, tap that mid price a couple of times, get filled. So this goes down to like 155. Probably just need a few more minutes in the trade. Yep. MGM is the ticker that I just traded. Yes. That's in pinch point. Okay. Dave, are you out? SPX at 190. Did you get out? Bill out at $1.65. Nice. I'm trading right around that mid price. So I've got 210. I'm going after 160. I'm trying to grab 50 bucks out of this thing. So I'll just give it a little bit more time. I should hear it click here and, hear the chimes from my broker in a few minutes. So it's looking pretty good. What else? I wanted to go into MS. Yeah, that's good. That's good because we want to see a catalyst, right? The whole point is it's pinched. I want to see a catalyst to start getting it to move, and then I'm given enough time to let it hit an expected move. So MGM, I took that trade. MS is Morgan Stanley. We're sitting here at 144. I mean, I don't really want to trade this both ways, but we're overbought. This is a nice spot to have an interesting center. It's like, is it able to get higher? If it is, maybe we can make some money there or lower. Probably due for some volatility on a lot of these like melt up stocks. Just got filled for 160 on daily profit play. So that trade is now nice winner, taking profit. So daily profit play, alerts, update, 10:05 a.m. Eastern time. Today's daily profit play, entry 210 credit, closed $1.60 debit. That should be about a 25% winner. 23.8% winner. We'll take it. And not bad. So, you can be greedy and just sit a little bit longer and see if price just does nothing until FOMC, or you can just take your money and run, which is always nice to get out in the first 30 plus minutes of trading. 36 minutes in, and we got a nice 23% winner. Now I just let the rest of the day kind of unfold, right? So FOMC, I mean, I would not be surprised if today's going to be the FOMC day that's like really calm, and then 2 p.m. it goes up or down, and it's just all over the place. It's uncommon that FOMC gives us a lot of direction. Usually it's news comes out at 2 p.m., markets move, press conference comes in, markets recenter, and it's just a bunch of noise. A lot of FOMC days are noisy days. So I just wonder if there's a lot more riding on it as far as like price sensitivity because it's Powell versus Trump and all the pressure and all the hearsay and or is he going to get fired? Is he going to resign? Nobody knows. So I think he's just going to stay the course. He probably won't address a lot of things on the president. He'll probably take the approach of like, not going to comment on that, whatever. I don't know. I don't see him really engaging in that. Okay. Lynn MGM strikes. I posted it. It's in your pinch point tracker. It's in your pinch point Telegram. Okay. So I'm going to look at MS, which is Morgan Stanley trading around 144.73. Let's get this one priced out, see what the strikes look like. Earnings July, oh, it's a dividend, sorry, July 31st. MS is sitting up near these highs. I think we have some decent direction coming in this one. So MS out to October. Fudge. It's only an $11 plus or minus, but I've got $5 wide strikes. It's just not precise enough to trade it. If I went $5 here, $5 here, I'm paying 3 to make 5. I just don't like the trade. If I'm willing to pay a little bit more, I pay 5.24 to make 10. That's okay. We're just going to be outside the expected move. I just don't think it's a good price. So that's a no. Visa has earnings, or I think it's having earnings now. They already had earnings. We're still pretty coiled. Let me check Visa, MasterCard, and Amex. Visa's pretty pinched. MasterCard is MS. No, the hell's MasterCard? MA. Lightly pinched, and then Amex is AXP. No pinch. They're not ready. I'm gonna cross that off. So IWM, DIA, and V, I think those need a little bit more time. So yeah, I mean, I got to trade. MGM's good. I got to trade this morning. That's fine. Today, I don't have any crazy outliers. I think that the market is, maybe going to stick around these levels for the morning, which so far that's proven to be true. So that's how we grabbed a nice win on daily profit play. Now we just kind of chillax for the day. Drama comes at 2 o'clock today. I'll be in a trading battle at that time. I think we start at 1:30. So if you want to jump into my YouTube channel, we'll be pushing a trading battle, be hopefully trading through Friday and making some nice profit. Okay, what I like to spend some time on now is move over to rolling calls because I'm going to do a few of those in my live accounts. So message, where's it at? Rolling calls. And I'll give you the breakdown of like how I started all these trades, what I'm still doing, where my break evens are at, how it's like basically it's kind of like a campaign. If you start buying a stock and trading options around it, you want to track your pluses and minuses. You want to track your debits and credits, okay? Because if you're trying to take a core position, this is kind of my whole point. If you have a core position, I'm going to do this on Intel, which is trading down to $20. Like I I need to add a call, but I'm just going to keep kind of chipping away at it to lower my cost basis. Um, but basically, to me, rolling calls or rolling positions, okay, is about the campaign. So I want to keep the shares of asset, but also generate income or lower costs, increase profit potential. Okay. So if I buy a stock at this price and I sell a call, so this is my buy stock. Okay. And then up here, I sell a call. When you sell a call for credit, this will lower your cost basis. So if I sell a call for that credit, this now lowers my cost basis. This is my new break even. Stock price less the covered call credit. Okay. And if the price of the stock goes up through my call, it can get called away. Question is, do I want it to get called away? If price goes down below, I'm just going to keep adding more calls, doing more calls out in time. And in this case, sometimes rolling calls, which is if it hasn't quite expired yet and I still want to generate the income, then I just roll my calls. So usually when you roll a call, you're rolling out in time and you're maybe modifying the strike price. All that's going to help you do is I like to take roll calls or roll in anything if I can roll it for like nothing. I don't want to pay the broker to roll something. So you can roll a trade to keep it alive. You can roll a trade to generate more income. And I'm in the case where a lot of these trades are I'm rolling those calls for more income. Okay. So I'll give you the scoop here on this campaign for Intel. Intel, I bought the shares, added a covered call, rolled a covered call, and my break even is down to 21.05. Okay, 21.05. Now we're trading at $20.42. If I just want to repair Intel and kind of forfeit some of the profit, then as long as I sell a call at $21 and get a couple bucks for it, or maybe even 30, 40, 50 cents, if it gets called away at 21, I'm still getting a break even trade or better. I think Intel realistically is probably going to come down here to like 18 and then rally back up to 24. We probably have a range trade down here in Intel. So if I'm gonna add a call, it's with the intention of I don't really want it to get called away for like break even or better. I just want to keep lowering my cost basis into the low 20s, maybe down to like 18 and change. And then if I can let this go back up towards 23, $24, that to me is a better spot to take some profit. Okay. So on Intel, here's the trade. I have all the shares. I have an August 1st covered call at 23, which is now up 99.3%. So this is worth literally an extra dollar. If I just let it expire on Friday, it's worth an extra dollar. So what I'm going to do is I have most of that value out of this trade. Every, covered call is worth $1.48, $1.47. So I've made, whatever, 1,000+ bucks on this thing. But I want to roll these. So I probably can't roll it for the $23 strike for a lot of credit since we're down to like $20 and change. So here's what's going to happen. If I go to the August 1st, $23 strike, that's already up about 99.3%. I'm going to do a roll on this. And I'm curious if I roll this out by a week, the broker says you can roll that for 4 cents. Not that interested in making 4 cents on a rolled call. Okay. I'm more interested in, okay, let's go a little bit further in time. If I go out to the 15th of August, I get 11 cents for the same strike. Okay. Still not great. How about to the end of August? Okay. Now I can keep the strike the same, get 25 cents. It's not great, but across the board on, 1,500 shares, like it's not awful. I can still make $375, like helping my bottom line. Okay. Better than nothing. Now, if I roll this down, my break even is 2105. If I get it called away at 22, I'm getting 41 cents. So 2105 is my break even. Get it called away 2064, get it called away at 22, I make $1.36. I'll still make over 2 grand in Intel if it gets called away at 22. But at least I'm chipping away a little bit better at I mean, 25 cents versus 41 cents versus 53 cents. This one is if I want to just get out of the trade and repair this thing, put it at 2150, get 50 cents in the trade, lower my cost basis. This is probably the smarter roll right now is to just get out of the trade or at least do as much cost reduction as I can without obviously taking on risk. Okay. So I'm going to do the 2150 roll out to the end of August. And that way I have all of September and October and November and December to keep rolling. So I'm going to try to like sweet spot this thing where if we end up coming down to like 19 or 18, I think we go back up into the $23, $24 range. So I've got break evens at 19.12 and break evens at 21.05. I'm going to take those down to about 53 cents more credit. So then I'll have a break even in the 18s, which is great, and then a break even in the 20s. And they get called away at 21.50. Okay. Um, got it. Just checking all these. Yep. Okay. So this one's going to be a roll out to the end of August and down to the 2150. Try to collect 55 cents would be great on this trade if I can get it. 55 not taking. I'll go mid price. It should be better than 51, hopefully. 53 cents. Okay, so that's going to be Intel is going to be an 8, 29, 2150 for 53 cents credit. All right, now I'll do that across the board. So August 1st, roll out to the 29th, down to 2150, and 53 cents should fill. Okay, so I just give me a couple minutes to do this one. So rolling here. So out to the 29th, down to 2150, taking a chunk out of this, filled. Build. It's 29th, 2150. One price under the mid, which is not bad. I'm getting a better than bid price, which is fine. Okay, so those have all unrolled out to the 29th. This one here, 29th, 2150, 53 cents. So August 1st out to the 29th, 2150, 53 cents. So this one to me is more of a game of I'm just trying to lower my cost basis. If it gets called away, it's okay. It gets called away and I still make about $1.50 to $2 per share. To me, it's an income trade. My upside was around, $4 to $5, and I'm getting it called for $2.50 to $3. Like I'd say it's good enough. Okay. If I want to keep Intel forever, fine. I'll just keep rolling calls. But for right now, this will suffice. Nice work, Dave. Yeah, today was great day for daily profit play. All right, that just got filled. And this should be the last one. Okay. So now all of my August 1st are zeroed out and they've all been replaced by August 29th. So I went from a 23 strike to a 2150, but I pulled out 54 cents on these fills. 54, 55, 54, 44. So that's my minimum credit. So now I can update my tracker. Rolled to 829 expiration, 2150 covered call for 54 cents credit. New break even. So I've got a 2105 minus 54. So I got a 2051 break even there. Okay. Then I also have a break even of 1912. Minus 54 cents, so 1858. $8.29 expiration. $19.12 to $18.58. Okay. Got it. Okay. And then 1959. One more break even here. Rolled to 8.29 expiration. 21.50 cover call for 54 cents credit. So 1959, 1905. All right. So if it gets called away at 2150, I'm making anywhere between $2 to $3 per share. To me, I'm okay with that. It's just a repair. Intel's not a high flyer right now. It's just a range trade between like 18 and 24. So I'll work the range. So Intel, done. Next up, more of the fun one's going to be Tesla. Tesla is trading at 322. So Tesla, I have some shares. So all of these accounts that have more than 100 shares, I'm looking to roll some calls. The other ones are just buy and hold for some dollar cost averaging. These are in the money calls. So 260, it expires on Friday. I don't want the stock called away, right? Tesla, I'm up, $34,000. I don't want the stock called away. I want income. So I'm going to go out more time. 260's in the money. We're trading at 320. I don't have to worry about necessarily a put because I'm giving myself, $60 a buffer on just selling calls. So as long as I can get $2, $3, $4 income, $5 income would be great. Bob says, "Hey Chris, today was the first day I've been able to get profit on my daily profit and order done about 10 minutes after you did. Filled at a buck 85, was just out of $1.55, $30 win. Bob, I love it, man. That's a great. Let's celebrate little Bob post there. Okay, nice work, Bob. Let's high five Bob. Also, I was wondering, where'd Kyle go? Kyle apparently didn't want my help yesterday. He didn't email me. I didn't see a comment. I also find out that I don't have a Kyle in my daily profit play, which I thought was odd. So somebody was complaining yesterday, like, hey, I can't get filled. I haven't been filled. And I literally asked, like, give me some information on any Kyle that's in my daily profit play. And I was going to try to reach out and see if I can help. Kyle didn't email me, and I don't see any Kyle in my service. So I'm here to help. And obviously the whole community's like, stay in, great course. I made this much money, easy trades, follow Chris, blah, blah, blah. So I appreciate everyone's input there, but I didn't see anything from Kyle. So all good. Okay, well, we'll see. Word. All right, let's go Tesla. So I have a collar trade on Tesla that's up $800. That's not bad. I have a collar trade here on Tesla that is down slightly. That's fine. This is out to the end of the month. I have wide bull put spreads that are up some bucks. I've got no naked puts on Tesla. All right, so collar trades are fine. Collar trades are fine. That's for owning shares, adding protection. These are the cover calls I need to roll by Friday. I'm just going to go ahead and do it today, just in case the market takes a little bit of a sour note through Wednesday, Thursday, Friday for whatever reason. I'm just going to try to pull some more of this if I can. So let me see what this offers. If it's not decent as far as rolling for credit, I think I'm going to roll this out to the end of August. So I have the shares 260. Let me do a quick roll here. If I roll this out to the end of August, I can keep the strike the same and get $250 for it. So if I keep it till the end of August, I get $250, and I can do that on 1, 2, 3, 4, 5 accounts. So that's what, 1250? So 1250 in extra income slash lower my cost basis on the net break even on Tesla. That's better than nothing. If I think I've got a big enough buffer here, I could sell a call at these highs and maybe we drip lower into September. Let me see what that looks like if it's worth it. So I'm getting for a roll here about $250 going out to the end of August. Okay, if I go out a little bit further, September, for example, I get $5. So so there's a big difference between if I get let's see here, August 29th, I get 250. If I go out to September 19th, I'm getting almost $5. So I don't have to go up quite another month. If I can get over, I'm going to try to get $5 on this trade if I can. 505. Try to get $5 maybe right below the mid price. Let's penny this thing. 503. It might not feel that high either. Try $5 because it's not quite going out another month. Go 495, 490. I'll go 5 cent increments here. And sometimes this happens with rolls. You just have to kind of play around with the prices and see where you can get your fill. I got filled at 486. So Tesla, I'm rolling to September 19. September 19, 260 for $4.86. So that's 486 on 5 accounts. It's $2,400 added to my bottom line. So it just became an income trade. I'm just going to keep rolling these. So roll September 19, kept the strike the same, 4.86. Maybe I get 490. Try the same fill. Filled at 486. roll. September 19, keep the strike the same. 486. Getting filled. 260. 486. Getting filled. All right, this one's a 280. Let me check my break even on Tesla. Willing to own 280. Okay. All right, so this one's a 249.04 break even. I'm just gonna roll this one again. So this one I can keep the strike the same again. Roll. This one the credits are pretty solid. I can keep the 280. Let me see. Maybe I'll go a little bit less. Maybe go out to end of August. I'll do this one. So I can go 435, lower the cost basis, or go to September, get almost $8 for this one. Yeah, I like this one. I'm gonna do this. I'm gonna go August 29th for another $4. So we get 425 in this one. So 420. All right, 422. Then that was the August 29th. All right, so that one is, that was an account that had ownership at different timing. So this is rolled to 8/29 expiration, 280 sell call for 4.22 credit. So that goes from 249, 249.04 minus 4.22, break even's 244.82. 244.82. And the other accounts, let's see what we have here. That one's fine. Okay. Okay. 244.82 break even. This one is 230.42. This one's going to be lowered down again. 230.42. So rolled to 8/29 expiration. Actually, I rolled it to 9/19. 260 covered call for 4.86. So minus 4.86, 225.56. All right. So if it gets called away, it still gets called away at 260. So that's worth almost 14 grand. And then the other trade's worth about 4. So there's $17,000 sitting in profit on Tesla on top of the money I've already made. So that's an income trade on Tesla, and it is now done. So 486 and then roll to 8/29, 280 for 422. All right, next up, I've got the Russell. Next up, shares of Russell. By the way, when I'm doing this, like, does anybody have any questions on what I'm doing here? Is this process making sense? So I'm just tracking everything over here. So this is one of the trades I just did. Um, so the way this started out was I started this out with a 111 trade. This is all back in like March and April when Tesla was dropping post-election and turned over with Mag 7 and it was turning hard and going hard to the downside. I put in ratio spreads. I did get assigned. So I was assigned. My break even was 247.95. From that break even at 247.95, I've then added calls, protection, rolls. My break even's now 225. So now I've got a 225.56 break even with a strike at 260 to get it called away. I understand that price is at 320. Okay. But if I can every 2 to 4 weeks get another $300 to $500, I will do that forever. As long as I want to own the shares and own the stock, I can keep working this position and ultimately just, price is here. If price goes sideways for a duration and I'm just rolling calls, my strike, I don't know if you can see me right now. I might be on like YouTube only, but if I can keep rolling my calls down, my cost basis looks like this. I bought the shares here, okay? And then after a covered call, they go lower. Another covered call or roll, they go lower. Another covered call, they go lower. They go lower. They go lower. They go lower. So I've lowered my cost basis. Now, if the price is still, here or higher, it's okay. As long as I'm still chipping away at credits, I'm building up the total profit potential when I ultimately let the stock go. Right. And so, I mean, what I don't mind looking at is I've lowered the cost basis by over $20, like $22 since I started owning this thing in April. That's not bad. Right. So that's an extra $22 per share that I didn't have by just sitting in the stock. But yes, the stock has gone up, $80, $90. And that's great to time it perfectly, but that's also not easy. So I get over the FOMO of like I should have just let Tesla do run by itself. That's fine. But as an income method, covered calls can still make me two to three, $400, $500 every couple of weeks. That's good income. It adds up. If I could do this just think about this like every month. If I can do $500 every month in just rolling covered calls, I'm getting an extra $6,000 a year on Tesla. That's if I just have 100 shares, right? So if I have 500 shares, that's an extra $30,000 to my portfolio. It's income. It's good, right? I mean, I could just do nothing. I could just sit and hold and hope the Tesla goes up. But if Tesla goes sideways or down, I've got a nice big buffer now where it's like selling calls, rolling calls, just helps me keep lowering my cost basis. Okay. All right. Here's IWM campaign trade. This one is part of also I did this in the Project Options Edge course. So let's go IWM. We're trading at 224. Let's go IWM. Okay, so we're going here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 1,400 shares of IWM. My strike is 201. I'm just going to keep rolling. This is, again, one that expires on Friday. I also have some good trades here. These are looking pretty solid. 88.8 or 88.3% on my 1111. These trades look really nice actually for some profit. These are back down. These are crazy low actually. I'm going to let this one just kind of go. I would own the Russell at $100 or less if this is actually assigned, which that's hardly. I mean, we have like a 99.5% chance of profit. So me having to adjust this one. I mean, the good thing is it's worth an extra $25. There's also a potential profit trap if price falls back down below 180 or 178. That's another $200 profit trap. So this could be worth like a $400 winner with a high probability win. So I don't really have to do much on that one. And then I'm going to check these rolls. If I can roll this up another dollar in strike, I'll go out to the end of August. Let's go end of August. I'm going to go roll out to the end of August, which should be the 29th. Okay, I'll go 29th and see if I can keep the strike the same. So I can keep the strike the same at a 201. I can roll it up to 202 and get an extra 35 cents, which gives me an increase of $1.35. So this gives me $1.28. This gives me $1.35. This one is actually going to charge me a debit. I still get $1.50 net profit, but I'm increasing my cost basis on this debit. So I'm going to do this. I'm just going to roll it up to 202. Okay. And keep the like 30, hopefully 35 cents. So let's try this one. IWM will be a roll. Let's go roll to 829, 202, 4. Let's see what the credit is. If I can get filled for at least 35 cents credit here, it'd be nice to get more. I'm going to start at 40 cents and see what happens. So if I roll, let's go out to the 29th. 40 cents is asking for a little generosity here. Let's see if the broker will fill me. Nope. 39. I'm going to try to get above the mid price if I can. Nope. 38. 37. 36. All right, I got filled with 35 cents. So an extra 35. Track this break even. Roll the 829. Expiration, sell the 202. Sell call for 35 cents credit. So the break even's now 192.44 minus 35 cents. 192.09. If I get it called away at 202, I'm making 991. So I've got 991 times 1,400 shares. It's another 14K in Russell. If I want to let it get called away, I'll just keep selling calls. Okay. So give me a couple minutes to go through this one and just get all these rolls taken care of. So roll out to the 29th of August and 202 should fill for 35 cents. All right, fill to 35. Good. 202, 35 cents. So the reason I'm not like thrilled about the credit is because I'm rolling up a strike. So I'm rolling up a strike, which gives me a full dollar increase in profit. So I'm technically pulling in an extra $1.35. So that's why I'm fine with 35 cents credit because I'm rolling the strike up by a dollar. Hopefully that makes sense. So 29th, 202. Oops. If I roll it higher, Jason, I got to pay a debit for it. So I don't really want to roll it higher and pay a debit to increase my cost basis. I'm just going to keep rolling for the decrease in cost basis. So I can still lower my cost by 35 cents and get the extra dollar credit, right? So because the strike increase helps me get an extra dollar per share, and then I get the credit on top of that. So that's why I'm not going up to 203, 204, because I'm just going to pay a debit for that and increase my cost basis. That way I've got the cushion. Like if price falls, I still got the cushion to like keep rolling calls at this strike and just generating income. Okay, almost done with this. 202. build 35. Okay, how many more? One, two more. And last one in this roll for IWM. All right, those are all filled. So the August 1st are all zeroed out and they've been rolled to August 29th. Now, what I want to do really quickly is just double check that everything matches. So IWM, I have 200 shares and I have two contracts covered. I have 200 shares, two contracts covered. Like the broker should do this for me when I roll. It should keep the integrity of like this account, this contract. So 200 shares, two contracts. 200 shares, two contracts. They should all match up. 100 shares, one contract. 100 shares, one contract. 100 shares, one contract. 100 shares, one contract. This one doesn't have IWM exposure. This one, 100 shares, one contract. That account was brand new, 100 shares, one contract. And these are new accounts. I don't think I have IWM in these. Nope. All right. So that's good. All right. I'm all set. So that takes care of IWM. Next one, I have UNG and JD. I don't have to bore you with doing more. UNG was a natural gas diagonal spread. So, instead of just owning shares, this one is actually this is kind of the poor man's cover call that I've talked about in some other sessions. So I have a $5 long call and I'm selling against that at 16.50. Okay. Now this is already up 100%. So if I'm closing this out for like full profit, as soon as I roll it, that's fine. My break even on UNG, make sure I updated my tracker with IWM. 192. Yep. So I'm good at 192.09. All right. Let's go to UNG. Break even on UNG is a debit of 920, which my break even is 1420. So similar to this one, like if I want to roll this down maybe to 16 or 1550, this is more of like, I still think natural gas is going to be like a big pop eventually. This is just not something I'm like, I know when natural gas is going to go up. I don't know when it's going to go up. We might use so much natural gas and produce so much of it. This might be like another kind of permanent like range trade. So I'm turning this one from what I thought was going to be a nice bull market starting on natural gas to we're right back to the lows again. So if I can just lower my cost basis and get out of here for, maybe a couple $1,000s, I'll just turn it into a winner. Okay. So the 1650, if I roll this, let's go keep the strike price the same. That's fine. If I roll this out to the end of August, strike price the same. Now that's not going to give me any credit. I'm not excited about getting 8 cents credit. If I roll it down a little bit more, roll it down a little bit more, my break even is 14.45. So if I do a 15, okay, I'm just looking to like repair it. I mean, at this point, I'm not trying to play games with like calling the bottom. I'm just trying to lower my cost basis if we're just going to come down and hit these lows at 12.58. It's like we hit the lows and I still can get it called away for a couple dollars profit. So at least I can get something for it. Like I get 24 cents here and grab over $1. That's probably fine. Because my call side is out to 2027. So I went out like 2 years on the long call, and then I'm selling calls against it to lower my debit, so that the total debit. That makes sense. So this for going out an extra 28 days, I get 24 cents. It's fine. I can get more profit here, but this at least gives me over $1 profit per contract, which I'm okay letting it go for $1. I'll make a couple $1,000. If I want to go farther, September 5th, maybe the monthly in September, I get less credit total. $15 get 62 cents. That brings me down to $13.60. So I get $1.40 on this one versus $1, but I'm holding it for an extra 20 days on top of what I was doing. I'll just do the 30s. So I'll do the August 29th, 1550 strike, see if I can get 25 cents out of this. Excuse me. All right, so that UNG is roll to August 29th, and I rolled it down to 1550. And that was for 24 cents credit. Okay. So now my break even's under 14 bucks. I have the roll to 8/29 expiration, 15.50. Sell call for 24 cents credit would be 1420, 13.96. All right. So rolling this out to the 29th, down to 1550 for 24 cents. Hopefully that will fill. Yep, good. And just keep doing this. So out to the 29th, down to 1550, 24 cents. Build. Come on, 24 cents fill. All right, what's everyone doing for daily profit play? You still in anything? You out? We should be out. I'll see what the trade's trading for right now, but we should be out. That's a nice win this morning. I'm just rolling all these August 1st out to the 29th. And should have just two more. Okay. I think that's it. All of my August 1st is zeros. All of them have been rolled to the 29th for 20, between 24 and 28 cents. I'll take it. So I have a 5 by 1550, which gives me a max profit of $10.50. My net debit on this thing would be 920. Net debit of 920 would be now down to $8.96. Okay, so the way the math works on this one is if I get it called away, I've got $10.50 of max profit on the diagonal spread minus the net debit of 896. Oops. 1050 minus 8.96. So I can make $1.54, and that is on 1, 2, 3, 4, 5, 6, 7, 8, 9. So I can turn UNG into like a fix, a repair for $1,386. It's way less than what I want, but the stock or the asset is not really cooperating. Where I thought we had a bull market and I was looking to make this run higher, but clearly we've pulled back aggressively and we're just revisiting lows. So my job is not to be waiting and hoping for this big pop to the upside. When in fact I'm like, well, if I just get it called away down here, just make the income, go find something else to trade. If you roll for a debit, does that increase your cost basis? Yes. Yep. If I rolled for a debit, so let's go back to that Russell trade. Okay. So the Russell trade, So I had IWM. I wrote it down here. So I have the 829. So I had the 8/1 expiration 201 sell call, right? That was my trade for today that I needed to roll. Okay. So what I can do is I went to 8/29 expiration, 202 sell call for 35 cents credit. So this is an increase of dollar. Well, I should say this. It's a decrease in net ownership by 35 cents, but it's an increase in overall profit by $1.35 because I get the $1 strike increase plus the 35 cents credit. Okay. Now, if I rolled to, let's say, 203, okay, if I rolled the 203, so this would be the 8/29 expiration 203 sell call, the broker is going to charge me 55 cents debit to take that trade. So this would be a increase in net ownership by 55 cents debit, but an increase in overall profit by, I roll my strike up $2, okay? $2 minus the 55 cent debit, which gives me an increase of $1.45. So I still make technically more money if I roll it up to 203, but I'm also increasing my cost. So instead of my break even now being at like 191 or 190, my break even would have been up by 55 cents. And it's fine. Like I still make a net $1.45 versus $1.35, but I'm more of the in the camp of like if I'm going to roll something, I want to decrease my cost. Decrease, decrease, decrease. So I look at my trade as I bought it here. I roll, 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 I roll. That versus I roll, right? If I roll it, I mean, and it's fine. Like I'm not opposed to rolling it for a debit, but I've got to be really confident that the price is going to keep going higher and be able to cushion any type of pullback. But if I'm lowering my cost basis, any cushion pullback is going to be okay. I can just keep selling calls. So I prefer to roll all my calls for credits. In fact, when it gets a little bit more challenging to do that, I usually just let the stock go. I'll let it go and I can reestablish another position. That makes sense? Rich, does that answer your question? I get to that situation where price screams through the strike price. Yeah, and that happens. But like I said, if you're selling a covered call, you're going to cap the upside. You know, if you're frustrated by the stock price ripping through your calls, then stop selling covered calls. Like as soon as you start selling covered calls, remember it's an income trade. It's not a catch the whole upside appreciation of the stock price move. It's not that trade. It's an income trade. And you've got to be okay letting the upside go, but still knowing that you can work through the trade actively. And if you want to stay with it as a campaign, you can keep rolling and keep rolling and keep rolling. Look, I have increased my profit potential on Tesla by about $14,000 in the last 2 months. Okay. Now, if you bought Tesla this year, how many people knew? Okay. Tell me, how many people knew that Tesla was going to be down 50 plus percent and then back up? Okay. We dropped 50 plus percent to the downside. And then we rallied up 69%. And then we fell back down 25%, like extremely volatile. I was pretty confident there was going to be a bottom, but I didn't know it's going to rip up 70%. And what did we see on AVGO and Microsoft and other Meta? It's like they ripped up 90, 70, 80, 90, 100%. Okay, well, yeah, in hindsight, I should have done nothing but own the shares and just let the thing go to the upside. But as soon as I took ownership and I sold the cover call and decreased my cost basis by $15, and I do it again for another five and another five and another five, another five, fine. I'm up like $35,000 on Tesla. It's okay. I'll make more money, And the premiums are so good on this that I'll just keep rolling it for income. I don't mind having Tesla in the portfolio, and I have a buffer. I mean, if my break even's 220 or my break even's 240, if we go into a sideways period where like August and September, Tesla just does this, I'm probably going to have the ability to lower my cost basis by another $10 to $15, you know? And if I wanted to then hope that price goes higher, then I stop selling covered calls and hope for some appreciation. But as price is going higher, I can also increase my strike, maybe be willing to pay a debit on that roll if it's going to ultimately make me more net profit. Yeah. So you just do the math, and it's pluses and minuses. But if it's helping you make more income or more profit as a net result, do it until it doesn't make any sense. Okay. All right. So price on the day, very, very cooperative daily profit play. You couldn't ask for a better day. I still want to note that the day is not done by any stretch. This day is still just beginning. There's plenty of volatility ahead. 2 p.m. to 4 p.m. Keep an eye on things. VIX is trading at 1589. So we're still looking right around that 1% move on the day if it goes that way. Otherwise, we have the 100% ATRs. Okay. And right now, prices seem to be staying in between this 50%. So 50% ATR, 50% ATR, that's based on the last 5 days. Price is still relatively contained. That's good. I told you earlier this morning, write down the 6405 and write down the 6335. Okay. 6405 and 6335. Those are my 100% ATR levels. If we go higher, this is the 6430. It's kind of my top for the day based on the VIX. And my 6330 is my potential bottom. And price is in the middle. So there's nothing for me to do to force a trade today for 0DT. The best trade that we took was the one we did this morning on daily profit play. We just took some profit on a non-directional move, and it was perfect. Okay. So that trade right now, I got out for 50. Oops. I got out for 50 cents credit. This one is now trading for no better. I actually made more money on the trade than what it's trading for right now, which is interesting. So I'm happy. I got 20 plus percent anytime for a daily profit play standard move is good for us, because now it's trading for $1.75, and I got out for $1.60. So I'm actually 15 cents better than what the price is showing right now, even though it's literally an hour later, right? That would be kind of annoying to be an hour later and I'm not seeing any more profit, which means there's something sticky about that little bit of movement we had this morning to the upside. So prices move here, made a little bit stickier. Now, granted, price can fall back into center and it'll trade back to like $1.60, $1.50, and I'll maybe look at it like, oh, I could have made some money. I'm fine. I got out of the trade in like 35 minutes. Okay. All right. So I'm going to take a screenshot here. I know this is chicken scratch. I think I'll just label this a little bit better so I can post this officially. So 6405, watch that level, 6430 to 6435, potential top on the day, and 6335 down here for the ATR, and then 6330. But watch VIX. Okay, so I'll make that a screenshot. I'll post that in Telegram. ATR potential top at 6430, potential bottom at 6330. FOMC 2 p.m. Volatility likely between news and Powell press conference. Okay. Sometimes these are good days to just sit back and watch and see how price action plays out. Sometimes these are days to, try your hand at a low risk, high reward trade. Just be careful. Every trade has risk. Just do your thing. Okay. All right. I'll let you go for this morning. Let's wrap it up here. And if you want to join me for the trading battle, I'll post that in Discord. It should be around 1:30 p.m. starting time. And we're going to try to grab a few bucks before the wild and crazy afternoon. Okay. All right. Let's double check that trade here. Probably offering a better trade now. Now it's down to $1.50. So we're back to center. And this is now trading for like $1.50, $1.55. So a bit more profit. But I'm happy where we took the trade this morning over 20%. Always like the 20 percenters. All right, buddy. Thanks for being here. And let's come back and do it again tomorrow. I'll see you in the trading battle. So I'll be trading battle, and then also I'll go a final hour session today to wrap up the day. All right.